a seismic shift is looming in the global financial landscape. The BRICS nations, an acronym for Brazil, Russia, India, China, and South Africa, have dropped a bombshell announcement. These nations, known for their significant influence on regional affairs, are now stepping onto the global stage with an audacious move that could potentially disrupt the international financial order. The BRICS nations have made an announcement that is nothing short of groundbreaking. They have expressed their intent to create a new reserve currency, a move that directly challenges the US dollar's long-standing dominance as the global reserve currency. This is not just a bold step towards financial independence, but also a clear signal of their growing dissatisfaction with the existing financial system. China, a prominent member of the BRICS, is not just stopping at the creation of a new reserve currency. It's actively building a UN reserve through an arrangement known as the Renminbi Liquidity Arrangement. In a collaborative effort with other nations including Indonesia, Malaysia, Hong Kong, Singapore, and Chile, China is contributing to a reserve that will be stored with the bank for international settlements. This move is a strategic play to strengthen the UN's position as a global currency and to provide support to economies facing volatility. This announcement by the BRICS nations and China's efforts to build a UN reserve are part of a larger narrative that reflects the shifting dynamics of the global economy. They are indicative of a growing desire among these nations to reduce their reliance on the US dollar and to create a more balanced and equitable financial system. The implications of these developments are far-reaching and could potentially reshape the world economy as we know it. As we continue to delve into this topic, let's remember that we are witnessing history in the making, a potential turning point in the global financial order. The implications of this announcement are far-reaching and could potentially reshape the world economy. As we delve deeper into this monumental announcement, it is crucial to understand the factors that have led us to this point. The supremacy of the US dollar has been a cornerstone of the global economy for decades. However, this supremacy has been met with growing frustration. Why, you wonder? Well, let's look at some of the reasons. For one, the freezing of Russia's currency reserves. This move, seen by many as a punitive measure, has led to a deepening skepticism about the use of the dollar as a global currency. As countries see the potential for their assets to be frozen, they are naturally inclined to seek alternatives. But it's not just about the freezing of reserves. There's another major player in this game, China. The Chinese government has been making significant efforts to promote the yuan in global transactions. They're working with nations such as Indonesia, Malaysia, Hong Kong, Singapore, and Chile to build a yuan reserve. Each of these countries is contributing 15 billion yuan to the reserve, which will be stored with the bank for international settlements. This move is seen as a clear signal of China's intention to challenge the dollar's dominance. Then there's the fact that China's foreign exchange reserves have been growing exponentially. They've increased by over $80 billion, reaching a whopping $3.13 trillion. Meanwhile, the US dollar has reached a 20-year high. This growth in Chinese reserves, coupled with the rising value of the dollar, could potentially lead to a shift in the balance of power. And let's not forget about the reports of a Saudi oil deal priced in yuan. This could signal a desire to reduce reliance on the US currency. If the world's largest oil exporter is considering a move away from the dollar, it could have significant implications for the future of global trade. These developments point to a possible future where the dollar's reign could be contested. The growing dissatisfaction with the dollar, coupled with the rise of potential alternatives, paints a picture of a changing landscape, a landscape where the US dollar may no longer be the default currency of choice. As the dollar's dominance stands challenged, who are the potential contenders poised to take its place? Let's start with the euro. It's no stranger to the world stage, but despite its wide use, it has struggled to match the dollar's reliability and strength. While it may pose a challenge, it has some way to go before it can truly compete with the dollar's supremacy. Then we have the yuan. China's People's Bank has been making concerted efforts to promote the yuan in global transactions, collaborating with other nations to build a yuan reserve. They are even considering a joint venture with Russia and other BRICS nations to develop a new reserve currency. However, China's currency has yet to gain the trust and widespread acceptance necessary to dethrone the dollar. But traditional currencies aren't the only players in this game. Central bank digital currencies, or CBDCs, are also emerging as potential contenders. These digital currencies, underpinned by blockchain technology, could disrupt the existing financial system and accelerate the de-dollarization process. But they too have hurdles to overcome, including regulatory issues and concerns about privacy and security. And then there's the potential new kid on the block, the BRICS bucks. The Reserve Bank of India is exploring the idea of a stable reserve currency independent of the dollar, while China and Russia are also considering a similar move. However, the feasibility and acceptance of such a currency remain to be seen. Each of these potential contenders faces its own unique challenges. The euro and yuan need to prove their reliability and gain wider acceptance. CBDCs need to overcome regulatory and technical issues, and the proposed BRICS currency needs to prove its feasibility and gain the trust of trading nations. The road to de-dollarization is not straightforward and is fraught with many uncertainties. In the center of this financial whirlwind is the concept of the BRICS bucks, a daring proposition, a potential game-changer in the global financial landscape. So what is this concept all about? The BRICS bucks is a proposed stable reserve currency independent of the dollar. It's a brainchild of the BRICS nations, Brazil, Russia, India, China, and South Africa, aimed at challenging the long-standing dominance of the US dollar in the global economic arena. The Reserve Bank of India is playing a significant role in this endeavor. They're working on arrangements that would allow companies to settle foreign trade in rupees. This would eliminate the need for dollars, thereby reducing the influence of the US currency on international trade. Picture this: Russian banks opening rupee accounts with Indian banks and Indian banks opening ruble accounts in Russia. A novel approach that could potentially reconfigure the dynamics of international trade and finance. However, before we get ahead of ourselves, we need to consider the potential hurdles. The proposal of the BRICS bucks faces a significant challenge: acceptance. Trading nations within the BRICS sphere would need to transfer valuable foreign exchange reserves into this new currency. This is not a small ask. It's akin to asking someone to trade their reliable old car for a shiny new model, with no proven track record or user reviews. Moreover, analysts have expressed doubts about the feasibility of this shift. They believe that these nations may prefer to move into gold, a more stable and universally accepted asset. After all, gold has been a symbol of wealth and stability for centuries, and its appeal remains undiminished in our digital age. The path to the acceptance of the BRICS bucks is fraught with obstacles and uncertainties. It's a bold move, an audacious attempt to shake up the established order. But as with any new venture, only time will tell if it will succeed or fail. The BRICS bucks represent a bold move, but will the world buy into this new currency? Only time will tell. The potential implications of this BRICS announcement are as vast as they are profound. Let's delve into the possibilities. Firstly, the US economy may face significant disruptions. The dollar's status as the world's dominant reserve currency has long been a cornerstone of America's economic might. A shift towards a new global reserve currency, whether that's the BRICS bucks, the yuan, or something else entirely, could undermine the dollar's supremacy and shake the very foundations of the US economy. The ripple effects of such a change would certainly be felt worldwide, potentially leading to volatility and uncertainty in global markets. Secondly, the move towards a new reserve currency could accelerate the adoption of central bank digital currencies, or CBDCs. These digital currencies backed by central banks could revolutionize the way that international transactions are conducted, offering increased speed, lower costs, and greater transparency. But they also present challenges, such as the need for robust cybersecurity measures and the potential for increased surveillance by governments. Thirdly, there's the potential market for gold-backed stablecoins and asset-backed stablecoins. The prospect of trading nations in the BRICS sphere moving their reserves into gold instead of the BRICS bucks could lead to a surge in demand for these types of digital assets. Gold-backed stablecoins, which combine the stability of gold with the convenience of digital currencies, could become an attractive alternative for investors looking to hedge against volatility. Asset-backed stablecoins, on the other hand, could offer a way for investors to gain exposure to a wide range of real-world assets, from commodities to real estate, all within the blockchain ecosystem. In conclusion, the BRICS announcement opens up a Pandora's box of possibilities, each with its own set of challenges and opportunities. The global financial landscape could be on the cusp of a dramatic transformation, and we are all witnesses to this unfolding history. As we stand at the precipice of this potential shift in global finance, one thing is certain: change is coming.